My next guest says that the melt-up, it can continue, but there are certainly some cracks under the surface, and I think we all agree with that. So let's bring in NewEdge Wealth Chief Investment Officer, Cameron Dawson. This is the part I think that's worrying everyone, the cracks, right?
Yeah.
Are they cracks? I mean, how big can it get? We see today's session, we saw Tuesday's session, and there's a little bit more anxiety in the air.
I think that we have to appreciate that we moved very far, very fast in September and October, and you had huge rallies in certain pockets of the market that weren't sustainable. SOX Semiconductor Index up 33% in just 2 months. Not surprising to see some digestion, but what we think is going to happen is that you're seeing a lot more differentiation between winners and losers, and certainly you're seeing that in some of the breadth metrics.
Right.
But at least through the end of the year, you do have two good things going for this market: earnings as well as positioning.
The revisions have been important, right? We just talked about the so few downward guidance, which is good, particularly as we go into the next year, and positioning. So some are saying, though, ironically, that this might be a bearish signal, contrarian signal, like maybe the CEOs are too confident.
Well, we think that the most important thing for markets is earnings revisions continuing to march higher. And what we've been saying is very simply, if 12-month forward earnings estimates are making new highs, the market will likely make new highs. And so we like to see this earnings participation. One thing that is catching our eye, though, even though companies are beating and raising, some of the stocks are going down, which would tell me that expectations are probably even higher than what consensus numbers are, and positioning might be very crowded in certain places.
So, I mean, I see that we've seen that for the last 2 weeks especially, right? I've been in some of these stocks, and, it's been a roller coaster, right? And people kind of pull their hair out, but isn't that also kind of good? In other words, if we were in this irrational exuberance phase, good news wouldn't be greeted by sell-off.
I think that that's a very good point, which is that if you were truly in a euphoric kind of phase, you would see everybody chase into strong earnings. So it's nice to see that things are a little bit measured, and that's why we should actually welcome digestion in markets. Right. We don't want markets going straight up in a line, because that tends to be followed by going straight down.
What about speaking of straight down, what about this market breadth? I mean, this is stocks above the S&P above 50-day moving average, less than 40%. I look at this maybe as a buying opportunity sometimes, but also it's not a healthy market, is it?
Well, I think that your point on breadth being a buying opportunity is a good one, but that's where it gets very washed out. When you see this measure go sub 10%, that typically is a close your eyes and buy kind of moment. But the reality is that breadth has been deteriorating for the past couple of months, even as the market was making new highs, which told us that things were a little bit more fragile under the surface than maybe the headline suggested.
I know you're not big on low quality.
Nope.
I know you're not big on low quality, so the junky, no profits, no revenue, all speculative stuff. Some of it's coming down. In the last couple of weeks, we've seen a lot of those names come down a little bit. Maybe it's harbingers for the rest of the market coming down.
Yeah, it certainly is a sign that maybe liquidity is getting a little tighter around the edges. Maybe people are getting a bit more rational. But you've seen the largest rallies in the lowest quality pockets of the market this year. Non-profitable stocks within the NASDAQ composite are up 47% this year. That's not sustainable. We saw that story in 2021, and we all remember what happened in 2022.
What about this, the death of data and the implications, particularly like for policymakers?
Yeah, I think that we're in a period where we are very much flying blind because of the shutdown, but it's broader than the shutdown. We've seen the quality of data deteriorate over the past few years, really since the pandemic. So it's not as useful as it once was. It's much more misleading, which is why you had so many people calling for recession in years like 23 and 24. And guess what? The U.S. economy grew above trend.
So what do we do about this? I mean, I've been an advocate of the Fed broadening out what they use, but they seem really to be stuck with the way it's always worked.
I think that we have to use market indicators. We have to be very pragmatic and understand that certain relationships have changed. A really great example of this is leading economic indicators used to actually lead. Right. Now they don't. They actually don't do anything anymore. Right. So I think that we might have to update models in order to reflect this new reality.
Yeah, that was one of the foolproof ways that the new recession was coming, and it hasn't worked. I got 30 seconds, so I want to ask you about your thinking on AI. There's a big debate. Bubble, not a bubble. Yeah,
so we think that you could be seeing a bubble brewing in the earnings, not necessarily the valuations. I think that some of the companies within the infrastructure side of things could be over-earning this year and into next year, which just suggests that we should not potentially extrapolate this kind of growth forever into the future. So we are still exposed to AI, but what we're wanting to make sure that we're doing is not overexposed to one tiny theme.
And where are you looking for opportunity right now?
So that breadth measure deteriorating is effectively a sign that there are things being left out of this rally. And so what we are finding is areas that are still high quality that haven't participated, but also within SMID cap and international, great opportunities for active management away from just indexing in those parts of the market where we're finding great names at great prices.
I got to tell you, I'm shocked that the SMID hasn't made a big move, considering what everyone expects from earnings next year. Lower interest rates, it feels like a perfect setup, to your point. Hopefully it works out. I'm glad we had you today. Thank you so much. Appreciate you.